Thank you, Dave. Hello, traders, and welcome to Swing into Wealth. I'm so excited to be here because guess what? Tonight, we're going to unlock the power of swing trading. The same strategy that allows everyday traders to grow their wealth, to generate income, to compound their capital, and finally break free from the grind of watching every tick all day long. For those of you that are new to Trade Out Loud, my name is Anka Metcalf. I'm a professional trader with over 25 years of experience in the stock market, futures, and active investing. I have trained thousands of traders, built systems that have been used to generate consistent profits for more than 2 decades. And I've never blown up an account. That's right, I've never blown up the account because everything I teach and everything that I've learned is based on discipline, strategy, structure, and timing. So tonight, I'm going to show you how to swing trade smarter and how to turn the market's natural rhythm into your personal wealth engine. So here's what you're going to be walking away with tonight. The exact framework I use to spot high probability swing trade setups before they explode, and how to make your money work for you, even if you can only trade part-time or only can place like a trade in 2 minutes in a day. Plus, if you stay with me till the end, because I'll be sharing something really special, and if you would like to join a live market environment, I have a real surprise for you guys. And also, I'm going to be sharing some really exciting setups that are repeatable time and time again. So you can start as soon as today as you are going to start scanning the market. So what do most traders do? What do most traders do? Like literally, most traders are running on a treadmill, right? On a market treadmill. They sprint, win a few, give it back, and repeat, right? So it's a cycle, and it's a never-ending cycle. And what happens to the account? The account balance goes up, goes down, goes sideways. And let's say 5 to 6 months into the process, guess what? They're back to where they started. Sounds familiar? You make money in the first month or second month, and then in the third month, you get everything back plus, okay? So why do so many traders put in the hours, take the trades, and still don't build income or lasting wealth? Have you guys asked yourself, like, why? Or I think this is a question for all of us, and especially for all of us that, are starting right now, okay? Or this is a question for me because I was in this situation when I started actually day trading, because I do come from investing and swing trading background. So I really didn't have these issues, but I did have these issues while I was day trading because it's a totally different style. It's so active. So one of the reasons is because, they are having a system that doesn't work for them. It's either too complicated, and if it's too complicated in trading, you're never going to respect it. Either the lack of a trading plan. So it's not because traders are lazy, because they put in the work. And I know that traders put in the work. And it's not because they're bad at charts or interpreting charts or analyzing charts. It's because they're focused on making trades, taking a trade. They're more focused on, let's click here, let's get in Apple, let's get in Tesla, let's get in Microsoft, instead of building a system. So what if I share with you the 4 traps that keep traders stacked? Would that sound okay with you guys? Because these are going to help you as soon as you're going to be able to place the next trade in the market. So write these down. First off is signal chasing instead of a setup mastery. So jumping from indicator to indicator, from YouTube strategy to Discord or X alert, when you chase signals, you inherit inconsistency. And by the way, you're trading somebody else's trading plan. And if that person does not share with you a performance portfolio, some kind of a tracker, then you have no idea if that strategy that you're following or learning or that individual is teaching you is reliable or not. When you master the setup, when you master technical analysis, when you master timing, you create repeatability. And not only that, but you have a system. You create a system that is repeatable in time and that works for you. And from this point on, you could just tweak the system. So I think this is one big trap for a lot of traders, especially for traders that are looking for shortcuts. Number two, no timing framework. That means like some buy because it looks good and sell because it's scary. So pros used a time playbook. When the market is likely to move, how far it's going to move, they're going to be determining projections for the market. If the market is into all-time highs, right, they're going to be using still measured moves. And when they have prior resistance areas or support areas, depending on whether you're long or short, they're going to look at those. So they have a plan. They also wait for confirmation. So a lot of times traders get triggered by this and say, hey, what do you mean? Like, you know, you have to wait for a confirmation. You have to wait for a confirmation, like in the sense of, imagine a base, right? So a sideways market, right? So you have almost equal highs and you have almost equal lows. So when you want to buy, you want to make sure that you're in the right cycle in the market. You just don't buy because it breaks above, or you don't short because it breaks below. You have to look and see if the asset is uptrending or downtrending. And most likely, if the asset is uptrending, you're going to buy. So you're going to be on the buy side. So that means that you're either in a cycle 1 or a cycle 3 of the market. So when you buy, you want to make sure that the price is able to take out all the prior highs from that particular base. So for example, if you have a stock that is trading at $402.50, and you have another peak that is at $400.50, and you have another peak at $400.65, you want to make sure when you place your buy order to place it on top of that, so that when the price action comes into that area, it takes out that area. So place it at least 5, 7, 10 cents higher than that range. And especially with high price stocks, give them a little bit of breathing room. And then you place the stop below the base. Of course, we're not talking strategy right now, but if it's a repeatable base of at least 2 to 3 lows, you could actually start dipping at the low. So you could actually grab the stock while it's trading into the lows. So what that means is that you're going to get half the size at the bottom as it's breaking out. Okay, so basically from the low to the high, you've already accumulated profits. All right, so think about today, like Beyond Meat. I'm pretty sure you guys, heard the big news, like Beyond Meat went crazy today, was over 100% up, and yesterday as well. So it started yesterday, and this is today's candle. So Beyond Meat shares, and by the way, they were halted today, soared as retail traders sparked meme stock euphoria. So here we go. Here it almost went to $9. And by the way, like a few days ago, this is a daily chart, was around 50 cents. Okay, so again, don't buy because it looks good, because a lot of traders have that FOMO feeling. So imagine if you were a buyer here, right at very close to $9, let's say $8.50. How would you feel right now, right? How would that make you feel? Because the stock pulled back so much, it's back into back actually below $4. Okay. So without the timing and without the right strategy and without the proper risk to reward ratio, this and any trade could be a disaster. So without timing, the right idea at the wrong moment becomes the wrong trade. Number 3, profit taking without a plan. I see it so often, taking profits without a plan, and it is ridiculous. So a lot of traders trade their P&L instead of trading the charts. So income and wealth building requires structured scaling targets and a trailing process that keeps you in the market of the move without giving money back. So let the market do the talking and not the P&L. So for example, based on the price action, you can take a decision whether you're going to leave the whole size that you have entered the trade with or start scaling. What I do is typically establish my targets. I always have 3 to 4, 6 targets, because if I get a power velocity move, I want to make sure that I have all my corners covered, and I want to make sure that I know exactly the areas where the stock could potentially get rejected and pull back, because all the targets are, for example, in an uptrend, resistance areas. And when the price hits that resistance area, it will produce a reaction most of the time, whether it's going to base into that area if it's very strong, or produce a shallow pullback, or simply just pull back 100% and even lower and stop you out. So you need to have a game plan for that. Look at the volume, look at the structure of the chart, look at the momentum, look at the sector, look at the market environment before you take that decision. And when it comes to targets, don't forget one thing. One of the most important targets is target number 1, because target number 1 comes from a high velocity momentum. You are getting a lot of algos, a lot of institutions that are dabbing into around the same location that you identify for as a setup or a trade. And guess what? Target 1 is the easiest target to achieve, because you have that velocity from the institutional power move, especially if it's happening in the first hour in the morning. So at target 1, if you're anxious, if you feel that hot potato feeling in your hand, it's always a great idea to scale out half, because that is one of the most important areas in the market. And from that point on, the market can, like I said before, it can either base or pull back in a shallow mode if the market is very strong, and then continue back higher again. And when it retraces and it creates that new bottom of the base or a pivot from the pullback and it rotates, then you lift your stop back up. You take it from where it was and you lift it higher. If I have a very strong momentum in the market, and if I see that target 1 is, the price is not going to have any problems at around target 1, then I'm not going to take profits at target 1. Okay. What I do is I set alerts before target 1. I set alerts before target 2, obviously in uptrends, right? So when the price action is at or around that specific zone, that resistance area, I watch the price for like few moments to see its reaction, whether it's going to break, it's going to slice like through butter and continue higher. And then what you can do is actually take your trail stop on half instead of dumping half at target 1, and take yourself out of the trade instead of the market taking you out. And what you can do is lift your stop to where you want it to cash in on target 1, for example, for half of your size. So these are simple tricks that are gonna keep you in the trade longer. And of course, number 4, risk sized by feeling and not by math. Guys, when it comes to position sizing, this is the only math that you're going to be applying. Risking what feels okay is how accounts bleed slowly and surely. Risking the R units, a fixed percentage of the trade, lets you survive any kind of drawdown and compound winners. It's so easy to come out of a hole of a loss or a series of losses if you apply the correct risk to your trade and apply the same risk to reward ratio for all the trades and the same risk. Keep the same risk on every single trade. It's not about like, oh, I feel so good about Beyond Meat. I think tomorrow it's going to go to 20 bucks, right? That's not the right approach, okay? Or when you look at Google, you're going like, oh, Google is fantastic. Google is going to make a deal with this company and AI and whatever, and it's going to go to the moon. That's not a great idea, okay? It's not a great strategy. You have to make sure that you calculate your position size based upon your entry, your stop, and the difference between the entry and your stop is your risk. And you want to make sure that the stock or the ETF that you're trading or futures or any instrument, crypto, has enough room for higher, has at least 2, 3, 4 R's to continue higher. So how many times have you ever had a green week turn it into a flat month because there wasn't a plan to keep the gains? So this is a really big deal for traders, like literally having a plan. So I'm going to give you my strategy, which is literally unique. I haven't heard anybody do it, so I'm going to be sharing it with you, and I share it with my students and my traders. So for example, and I'm going to give you, let's say, a day trading example. Okay, so let's say I'm in a day trade, and then I'm going to share the swing trading idea with you. So for example, if I'm in a day trade, and let's say in that specific day trade, I made less than 1 R, okay, less than 1 R. And I see that the market, there's definitely something very wrong. It means that the market doesn't offer follow through and the market is range bound, or conditions have changed from the overnight or from the prior day, and it doesn't give you the opportunity to continue higher. You're getting a daily inside bar at the open, or something is keeping it from advancing, from getting into the velocity zone. So when that happens, and if I am up on the trade, for example, and if I make less than 1 R, because it happens, I do not take the next trade. Okay, so I'm done for the day because I only trade the power hour. So I've been trading the power hour for so much time. You're going to see that a lot of traders, you know, just a lot of traders talk about it, and it's very, very popular. Okay, so I trade the power. I was actually amongst the very first that came with the futures and with the power hour. So definitely pay very close attention to that. Now, if you have a loss, okay, that's a different story. I allocate myself 5 to 6 trades and 5 to 6 hours every single day, and everybody's different. What I do recommend, do not use less than 4, because a lot of times in high volatile market, you could have a trade that stops out, you could have a second trade that stops out, you could have a third trade that stops out. It doesn't mean that you have to stop trading, because if the environment is still there and the whipsaw, the volatility was very high, you need to take your 4th trade. Why? Because your decision is based on a proper risk reward ratio. So at least 3 to 1. So when you're taking your 4th trade, on that trade, if that trade reaches, let's say, 3 R's of gain, guess what? You've just cleared and you're at break even. And if it continues higher, you're going to end the day into the green. Okay, so make sure that your decision is not like a scorecard and say, oh my gosh, I took a first trade, I took a second trade, I'm out, I'm just not going to trade anymore. No, You have to trade what's in front of you because a lot of times volatile markets set up later in the day or set up later in the morning. And the last one is the fix is not trading more, okay? So when it comes to swing trading, you apply the same principles. So when you're swing trading, you have to respect the R's. You have to make sure that the price action has room to progress towards your target 1, towards your target 2 to achieve that 3R or 4R or even 2R or 1R because it depends on the market environment. So the fix and trading with an income or wealth framework is a repeatable setup, precise timing, a compounding process, and risk rules that protect your capital so it can grow your account because that's the ultimate goal, to grow your account. So tonight I'm going to show you, I can't believe we haven't even started yet. So tonight I'm going to show you how swing trading gives you the sweet spot because it's not about capturing the very low or capturing the very high. It's the core of the move. And it's time freedom, so you're not going to be glued to the screens and your account isn't hostage to randomness. So welcome to the future of wealth creation, and get ready to unlock the fastest and the smartest way to grow your money. And these are hidden secrets of the top 1%. So swing trading is the key to multiplying your money with precision if you have a strategy. So before we actually dive into charts, my favorite part, I'm going to give you some pitfalls of some mistakes that can cost you thousands of dollars. And mistake number 1 is chasing the wrong stocks. And we talked a little bit like Beyond Meat, that was an example. Mistake number 2 is over trading and burning out. So in market uncertainty, and we're going to talk about the Qs, we're going to talk about the SPYs, and they are still in uncertain territory, but they have very clean and easy levels. I mean, it's not like it's rocket science and you don't need a PhD to identify it. And it has a clear bullish above and bearish below level at this point. And over trading in sideways markets and picking entries within ranges or in the core of the range is a really big mistake because the outcome is 50-50. 50-50 in trading is really bad. So you have to aim towards 80-90% odds in your favor and the pattern. Mistake number 3 is trading without a plan. I know that you probably have heard that, you know, a lot of traders would recommend you have a trading plan. I was amongst one of the traders that said, hey, I don't need a trading plan. I have it all in my head. And that I was really wrong because I was all over the place. And that happened not in my institutional years, but it happened when I was day trading, when I decided to go into day trading. So you're going to take random trades. You're going to go like, oh my gosh, I'm going to trade a gap now. Then I'm going to trade a continuation trade. Then I'm going to trade some sort of climactic trade. So you're going to be all over the place. You have to specialize in one thing, in one setup, and then add on as you progress as a trader, as you understand, as that strategy is already working for you, then you move on to the next. And mistake number 4 is letting your emotions control your trades, fear and greed. A lot of traders are in a long position, and if they have not achieved the target and they go like, oh my gosh, should I raise my stop? Should I do this? Should I do that? Like, you have an entry, you have a stop, let the trade play out, okay? And that is valid for day trading as well. And mistake number 5 is not investing in the right education. You guys know, and you guys are here, you're so smart, you're smarties. So most traders fail because they go blind, right? They go like, oh my gosh, I have, let's say $50,000 laying around, I'm gonna get into the market, I know I'm gonna make money. They buy some stocks and the stocks turn around, okay? And they stop out or they blow up the account because they do not respect the risk reward ratio and they do not respect the risk per trade. And you have to apply the same risk on each and every single trade. So you don't have to be a math whiz in order to be a swing trader, and you do not have to have a degree in finance. So we're gonna dive in right now. So every year, guys, every year, stocks will move about 20 to 30%, maybe more. That's right, maybe more. And this happens at least a couple of times per year in cycles. Ta-da! Now, we have some cycles marked out here. So the first cycle that I'm going to refer to is the cycle from July of last year to December of last year, right? This was the first cycle. This was the first swing. And then the market was basing, entered a correction, and then it entered another phase, right? It entered the buy phase, it entered the greed phase again. So this phase is still present to date, right? We're still trading. By the way, this price is still trading above the 10 EMA. So this pink line right here, and by the way, I'm using very simple indicators. I'm using the 10 EMA, I'm using the 20 SMA, the 50 SMA, and the 200 SMA. That's it. So very simple indicators. So as long as the price action is going to reside above the 10 exponential moving average, the price is going to remain bullish. It's going to remain in a power trend. Now, this trend right here from April to October to now, to date, right? It's up 38%. Prior to that, prior to the base that we've had here for some time, right? Before the pullback, this is the liberation day, right? That drove the market lower. So before that, July to December, 18%. So you can see that it's in cycles, right? So it's about time for a little bit of a pullback. So be ready because this is the right time. And by the way, strong momentums are coming into the last quarter. Let me share with you Apple. Apple as well, January 2025, right? All the way into March. And then the pullback happened. And then from April all the way to date, $98 up 56%, right here 13%. It was part of the base, and here a whopping 56%. That's why the stocks are having a hard time, like right now, reacting and moving higher because they had an exceptional spring, summer, right? Also, this is GLD, gold. Everybody's talking about gold, right? So gold was poised for a pullback. It reached an extension. So if you're using extensions, you would have seen that it had reached a target extension. That's the reason why there is some profit taken. And by the way, from the daily chart, this is the weekly chart, from the daily chart, from the swing low to high, it already retraced 50%, okay? And it's possible that it will retrace even more into the around $350. So what is swing trading? So if I piqued your interest, what is swing trading? Swing trading is all about catching the sweet spot moves in a stock, right? Price, those price swings that play out over days and not minutes. So instead of scalping tiny intraday moves or sitting on a stock for years, swing traders ride the powerful short-term waves in the market. So how do you hold them? Well, typically, and how long do you hold them, right? A few days to a few weeks, typically from 2 days to about 10 days, but it depends on the market environment, because if you're getting a sideways market environment, you could actually, and you're going to be in those trades like definitely for a longer period of time because the price is going to coil and you're going to wait for your breakout. So some trades stretch into a month or two if the momentum is strong, but the goal is quick, repeatable wins, not long-term babysitting. Okay, so it's not your Warren Buffett type of trading, not generational wealth. So the bottom line is that swing trading is fast enough to keep it exciting, but slow enough to stay sane and precise enough to consistently bank profits. Let me share some more charts with you guys. This is a chart of the Qs, and again, this is 2023 to 2024, 28%. From this low to swing high, 21%. Again, swing low to swing high, 25%. Swing low to swing high, 44%. So remember, it happens at least a couple of times a year. Okay, at least a couple of times a year. This is a chart of Microsoft. So I brought it in here because we already had a power swing, 61%, and now we're basing. Okay, so what do you guys think? Do you guys think that Microsoft is going to pull back, or do you think that Microsoft is going to start powering higher? Well, the price action is residing still above the 10 EMA, so that brings the bullish case, and it's still power trending, and the base is into the highs, right? So if we take out the highs from the base, we can have our next 30% move perhaps into the end of the year. This is Google. Take a look at Google. Swing low to swing high, 80% move. This is the reason why the stocks are just basing right now and they don't have a lot of momentum. What's going to generate the momentum is earnings. So You can see here that we had a shallow pullback and a rotation, and we formed a base into the high. So if we take out this base here, so just watch it, right? We take out this base here, we will continue back higher, and we will calculate the next low to the next swing high. Remember, 30%. Now, I do every year a market forecast, and this year on January 3rd, I called a stock, and I called Fannie Mae Long. This is one of the stocks that is leader in my IRA, leader in my swing trading, leader in my investing portfolio, triple digits gains. This is where I call the stock right here. 276% from this swing low to the swing high. From this move right here, I'm up like 230%. Then we based, I added more, and again, the stock moved 146%. The next time around, swing low to swing high, 119%. Okay, so this is something that I am in right now. And the stock just pulled back. And look, if you step back, you could see the symmetry. And the stock has a really keen affinity towards the 20 SMA, and it rotates around the 20 SMA ever since the breakout. So this is kind of like the happening place. And today, this week rather, it already rotated on the weekly. So already created a weekly rotation. So that means that the stock may be getting ready for it for another power move. Look how gorgeous this is. So humongous, massive gains in FNMA for us. So when to buy stocks? Well, you have to buy them at the right time, right? You're not going to buy here as the price action is extended, right? So you got to wait for the right timing, right? The entry is everything. So what I do like to look is at the end of the day, how it closed. Did it close strong or did it close weak, right? So I'm going to show you some examples here. These are the Qs, right? So as you can see, the Qs right now, $600, and this was actually around 153. Let's see where they closed. Okay, so this is the daily chart. So what I do is I bracket the high like so, and I mark the low. If tomorrow the price action is going to trade above the above $612.24, the price is going to start moving higher. Period. If the price action, and you can see here a bottoming tail, well, it's not called bottoming tail for nothing, right? It's called the bottoming, right? So the stock shows that it's likely to bottom into the $600 location, plus it's a whole number, right? So if the price, let's say tomorrow, gonna take out the 612, that's gonna go higher. If it breaks the 599, most likely it's gonna go back into the 50 SMA. It's not rocket science, okay? So let me share with you another chart. Okay, look at this stock, super strong, right? Had a super dynamic move today. It actually broke above the, excuse me, the 200 SMA. So that means a super powerful close. So what do you think is going to happen to the stock? Whether you want to day trade it, whether you want to swing trade it, it's bullish, guys, bullish over the high. So who is swing trading for? I mean, bottom line is for everybody that wants to make money. Excuse me. Okay. So I have like 5 minutes left. Time to wrap up here. So when not to buy swings. So you don't chase the tops. You don't chase the bottoms. You don't chase ahead of earnings or news, and you don't go into illiquid stocks, into low volume stocks. And bottom line, swing trading is about precision and patience. So you have to wait for the setup to develop. And you buy near support or breakouts, and by the way, never buy into FOMO, fear of missing out spikes, just like Beyond Meat, right? Chop zones or downtrends. Excuse me. Bottom line is that you have to trade with the trend. You have to have the volume confirmation. Risk management is key, whether you want to use 1%, industry standard like 2% or more, depends on your personal risk tolerance as well. And you have to follow the trade management rules. If it's a swing, don't expect it to take profits the same day. So I have a surprise for you guys. I delivered the stock swing trader for the last, I don't even know, I think it's like over 10 years. Yeah, over 10 years we have been delivering the stock swing trader. And it is a very powerful, very powerful newsletter. Oh, I'm sorry, it's 15 years. Okay, sorry, it's 15 years. I was like thinking. Okay, so for 15 years, we have been delivering the stock swing trader. This is a comprehensive market analysis, micro to macro. You get market focused themes, sector performance, technical analysis, review, trades, earnings calendar, economic calendar that is likely to impact the performance of the market. You get access to real-time performance portfolio. You get a private X feed where we post all of the new updates, and you get a platform layout. If you're trading with Thinkorswim, I'm not affiliated with them, but I have been trading on it for a really long time. I love it. So if you want to copy the layout, or for any platform you kind of want to adapt it, I'm going to share that with you. You get student personal support if you're in a stock, or you have to do some trades on your own if you want. If you don't want, you just follow us. But platform, for example, for student support, if you have a stock and say, hey, you know what, I'm going to look at the stock, I'm looking at the stock, is this a good buy? Or if you want to have that extra support confirmation, you can email. You get a risk sheet, a risk calculator for you. You get money management cheat sheet. So you get a whole bunch of information, plus a lot of trades. I'm going to share with you the performance portfolio in a sec. So if you want to pick the stock swing trader, if you think this program is for you, if you don't have time to scan, to do market analysis and all that stuff, this offer is for you. $97 for the first month, and then it's $299. It's really a small price to pay for sanity. And again, it's your time to decide. Will today be your number one day, your day one, the moment that you embrace the change and pursue your dream? So just one more day that slips away. So I'm going to share with you the performance portfolio. It looks like this. These are our trades, open trades right now. And you can see here we have a hot list. We have some investing ideas that I'm sharing with you. We're going to have a separate program for that. You have a position size calculator in here. These are the indicators that we use. You have an option expiration calendar. You have your calendar right here, 2025, to see when the market is open and when the market is closed. P&L explained. You've got guidance, etc. And by the way, if you go to our website, you're going to be able to see 15 years of performance. So it's not like, oh my gosh, we're just posting it for this month or for this year. No, we have 15 years of performance ahead of that. So you can see like we have some, okay, so it's not here. I don't know where it is. Okay, sorry about that. So yeah, this is it. If you want to join, I know Dave is going to post it in the chat for you guys. Post the links, or if you're interested, feel free. And if you have any questions, feel free to email me at info@tradeoutloud.com. So thanks so much.